Incap published a Q3 report today morning, and I interview the company CEO Otto Pukk in this interview. Now, welcome Otto.
Thank you very much.
Let's start with the profit warning that you issued in October. Could you tell our listeners what did change and why?
Yeah, no, the profit warning we went out with as the destocking exercise that we have taken was going a bit slower than we initially had expected. Also that the profitability or the EBIT number went below the interval in that sense. And once this was clear for us how it will develop, then we went out with a profit warning. And so now when it comes to the release we did today, then we have kept the same steering. So hopefully no more need for adjustments this year.
Okay, let's continue with this inventory exercise that you got to know some 6 months ago that this must be done this year. Your new guidance indicates very weak Q4 volumes. So my question is, have you managed to push inventories of the biggest client down yet this year, because you have been constantly generating more revenue than the market has expected, and very likely sales of the biggest customers have not fulfilled the previous expectations as well.
I think we are seeing effects of this, or our customers or customer is seeing effects of the destocking. But it has I'd say taken more time to. It's like a big oil tanker, and when you start breaking it takes time. And so even if we saw this coming, then for us to get out the volumes that we had in the pipeline and then start decreasing when it comes to capacity, and so that have taken some time. So I'm quite convinced that our customer also will see effects of this, or have seen effects, and will see, especially now during Q4 when the volumes go down to some kind of bottom level. And then of course it all comes down to what is how their sales is developing, and so how long we will see that bottom. But we are quite optimistic in that sense still that we are working closely with the customer, and we are doing this exercise now, and once it's finished, it's time to move on in that sense.
Okay, you said in April that sales of this biggest customer is probably growing this year. Can you still comment if this is the case, or and potentially say anything about their sales prospects for the next year?
I don't have any info, but my understanding is that the sales has been stable and in that sense, but I don't have exact numbers to share how it looks like. But I have no indication that it shouldn't be stable and continue also next year in that sense with the same pattern. So but yeah, I don't have any inside information there.
And then have you seen any weakening demand in other accounts, or is this still very isolated issue with the biggest customer?
I wouldn't say that it's completely isolated. We have a few customers in much more scale that are facing the same. But if you look in general, and also as we wrote in the report, that most of our other accounts currently are growing. We are growing on the first 9 months. Of course, including the acquisition, but also without the acquisition of Elektroniikan, we have a nice traction and growth when it comes to other business than our biggest customer. So that doesn't show a tendency that this would be a widespread phenomenon. But there is a few handful of company that on a smaller scale we see the same in, but I don't think that is representative for the bigger picture. The opposite, rather, that the market is still growing and there is a good demand on the EMS market.
Okay, good. Still one more question about this issue. You have been producing for this biggest customer mostly in your Indian factories. Could you share what is going on in your Indian factories right now? How many factories are you operating and how many shifts do you have at use currently?
We are operating all three of the Indian factories, and that is also our intention to continue to do in that sense. But of course, the utilization is not as we initially planned when it comes to the third factory, and the volumes are clearly down, and especially fourth quarter now we will see the low point, and for this we have the Indian team and having done tremendous work, and we have reduced the workforce with over 1,100 or exactly 1,136 people, and that is big moves in that sense that we have been able to pull off and do, and also that shows the strength of our model down in India. Even if this has of course been very tough on the team, and so then still this reflects strength. I think many other companies I think would already be in red doing those kind of moves, but we are not. We are still profitable and in compared to where many other EMS companies are performing, and then we are doing quite well during the circumstances.
Yeah, I understand that that's not easy. Do you expect headcount in India to go still down during Q4?
Currently we have not planned during Q4, but it all depends on how sales is developing and what is happening. We are always flexible. I wouldn't be surprised if it's somewhat smaller or somewhat bigger if we look at it after. So it's not in that sense. The capacity is something we always are tuning and doing, but yeah, we don't have any plans for any major layoffs. So those are now done in order to cope with the Q4 volumes. But let's see. Hopefully we will add on some rather than take away some.
Okay, let's go then to Q3 performance. How would you describe that?
No, I think overall on Q3 we still are. I would say this is a period where we are pulling the real brake. We saw a little bit of it in Q2, but now during we're going down into the volumes that this destocking is realizing. First part of the quarter still relatively strong figures, and that's also why we see the result what it is. I think of course we have announced it, and everybody who follows us, I'm quite sure, or understanding and expecting where the numbers will end up. But I still want to point out from here that we have good traction and organic growth on other accounts, except for our biggest customers. So this is the other part of the business is going strong, and we have good development on it. We also have very positive integration when it comes to the Pennatronic or now Incap US team, and are moving with those projects in a very positive way. So there is yes, it's a little bit of a shadow, or we have a big cloud in the sky with our biggest customer, but there is light here as well to look at, and I think that is a key thing to take with us from it. And once more, I want to emphasize that we have done a major reduction of manpower in our Indian unit, and still we are in black, and well in black in when it comes to the EBIT and the profitability. And I think that shows the strength of our operating model, and of course the hard work of our fantastic team that we have.
Okay, thank you. Then you answered my next question about Penatronics integration same time. So let's jump over that. But then let's talk a bit about your own inventories, as inventories are always important to watch in this industry. Incap's inventories increased quarter-on-quarter basis some 10 million euros, and if I understood correctly, Penatronics consolidation explained some 9 million of this increase, but on comparable basis, inventories still increased even if your organic sales on group level is down in Q3 and going down in Q4. How should investors understand this development?
As you said, that if you look to increase, the majority of that came from the acquisition, and so trending we are moving downwards. I think Antti mentioned that we without, if you exclude Penatronics, it was just a slightly above the previous quarter level. So I think that is, but of course we were moving. If you look in the bigger picture, we are now moving into a much lower volumes. Materials we have been driving, of course, to higher volumes. So as I have said before, that I would expect that during this stop that the inventory levels in shortly might get up a little bit, and let's see how it develops now during quarter four. But in general, I wouldn't say that there is no nothing that we have done I would say consciously to increase the inventory. Rather the opposite. I would say that the inventories are decreasing. There's less problems with materials coming in, and there's a bigger turnover in the warehouses, and so over time, of course, this will match the volumes that we are having.
Okay, then you have had now some 6 months time, which is not too much in this industry, but it's anyway 6 months time to look for new clients for Indian factories. What kind of progress could investors expect from this front next year?
Yeah, no, it's of course very hard to predict in that sense, and currently we haven't given any steering or so for next year. So I don't know if I'm even allowed to comment that in detail. But we're working hard with acquiring new customer and also increasing the business of other existing customers that we have. And as we showed in the report now as well, that this has been successful, and I have a strong belief in the team and in the work that we're doing, that we will be able to continue and maintain growing other accounts and other, how to say, getting new accounts and growing other business than our biggest customer in that sense. So that will hopefully continue also going forward.
Okay, for the end, let's look at the prospects of entire industry for the next few years, as we are now heading from relatively unusual times to slower economic growth and higher interest rate environment. How do you see industry prospects for the next few years?
Yeah, no, if reading most analysts, I would say that I agree with that. We still see some kind of growth in the industry. So if you look at European EMS market, I think somewhere 6% or so it's expecting to grow. And if you look at the Dieter Weiss and Informa, for example, on their reporting, and I think that as an average is probably realistic for the market. This is still a lot of trends supporting growth, both companies outsourcing more, and we see the reshoring, or I would say the backshoring from Asia still active, and so there's a lot of positive trend. Of course, EMS business is a part of the whole economy, and our clients are in very many different sectors. So it of course depends very much what happens in the bigger picture, and what is a little bit sad to see is that these kind of different geopolitical challenges continue now. Now we had have had is still ongoing. People are not talking very much about the war in Ukraine, and now we have a new conflict in Israel, and of course all of that affects the global economy and also the EMS business.
Thank you for the interview, Otto, and the best luck for winter.
Thank you very much.